Well, sunshine, the movie biz, beautiful people, California. Did you see the sunshine? It's also an economic disaster, and critics see many similarities between California's politics and the politics of this administration. They say California is a financial barometer for the rest of the country. California's sales tax rate, more than 8%. That's the highest in the country. The national average, you see there, 5.6%. The top 1% of Californians pay 48% of the income tax, also among the highest in the nation. On top of that, the Golden State has the nation's fourth highest unemployment rate, over 11%. And now some worry that California's liberal outlook may keep the nation's economy from a real recovery. With us now from D.C., former spokeswoman for Governor Arnold Schwarzenegger and former Deputy Communications Director for Fred Thompson's presidential campaign, Karen Hanreddy. Karen, I'm a Californian. I love it out there. I mean, it's great. It's a great place to live. But, man, it is in such deep financial trouble. Now they're asking the government to pay their IOUs. Do you see similarities on where California is and where the rest of the country might be going?
Absolutely. I spent 20 years in California. I only moved here 2 years ago. And look, there are a lot of problems in the state of California. Certainly, they are not all the problem of Arnold Schwarzenegger, the current governor. But there are a lot of similarities, I think, between the way he governed when he first came in and what President Obama is doing. And I hope President Obama learns from the mistakes of Governor Schwarzenegger. First of all, this energy policy that the president has proposed. Look at what's about to happen in California. Governor Schwarzenegger signed into law AB 32, probably the single most far-reaching regulation, environmental regulation in all of government is about to take place in California.
And Karen, if you talk to the businesses out there, they're saying the taxes are bad. Yeah, we all know the taxes are heavy out there, but they're not complaining nearly as much about the taxes if you run a business as the regulation, as the workers' compensations. Go ahead.
Look, workers' comp, the one thing Arnold did is he lowered workers' comp when he came in. But you know what? The workers' comp board is trying to raise rates again. They want to double them. It drives businesses out of California. As many as 64 independently owned gas stations in California may be shut down because of this new environmental regulation. They have 11% unemployment rate in California right now. They cannot afford to be
well, you talk about gas
jobs
stations, Karen. You talk about the gas stations out there. One of the reasons is California's got 20 different blends of fuel. I mean, you got to go in different counties. You got to blend your fuel different. Can you imagine Coca-Cola selling to California? They say, well, you can sell here, but you got to have 48 different recipes. They'd say, well, we can't play like that. How can we do business if we have 48 different guidelines or 20 different guidelines?
Look, bottom line in California, they make it extremely non-competitive or uncompetitive for businesses in California. But that's the same complaint that you're seeing today with the president saying that he's going to, dig into these offshore tax havens for businesses. But at the same time, he refuses to provide an incentive to make it more competitive to keep jobs here in America. He refuses to cut the corporate tax rate. There are a lot of similarities and parallels between these two administrations. As California goes, so goes the rest of the nation. This environmental law that they've signed into law in California is likely to be replicated at the federal level. It will touch every single life in the nation. It will impact the economy significantly if President Obama follows suit. I hope he doesn't. There are many other similarities. Look, when you raise taxes in California, they tried to do it in 1991 in the middle of a recession, and revenues actually went down. So we know that tax increases are not the way to get yourself out of deficit.
And just to point out, we said that 1% of California taxpayers pay 48%. To take it one step further, the top 15% of all taxpayers in California pay 84%. Anybody who makes over $100,000 is in that top 15%. They pay 84% of all the income tax in that state. And what they're finding out, Karen, is that when the economy goes south, those tax revenues go south. And what do they have to do? They have to raise taxes, sales taxes and car taxes.
But that's not the answer. Listen, when Schwarzenegger took office in 2003, he inherited a $28 billion budget deficit. Spending increased 20% if you take into effect inflation since then and today. And you know what their budget deficit is today? $42 billion budget deficit. So they've raised spending, they've raised taxes, and their budget deficit is $42 billion versus $28 in 2003. Spending is not, increased spending is not the answer. It only exacerbates the problem. Obama just signed has proposed a budget. Look, it doubles the deficit in 5 years, triples it over 10 years.
And the same thing
you can't spend your way out of this problem.
And the same thing that now Governor Schwarzenegger ran against Gray Davis on was the fact, and the reason they tossed Gray Davis out of office is the fact that this money problem was a huge problem in California. Now it's worse than it was when Gray Davis was in office. We should also mention, Karen, I got about 10 seconds left, that California is democratically controlled, except for the governor.
It is democratically controlled, but they still require 2/3 majority to pass a income tax increase. Thank goodness they don't have that. Imagine how bad it would be if they did.
Karen Hanratty.
It'd be even worse.
Thank you, Karen.